What's up, everybody? Welcome to the Stocks channel. Tomorrow is CPI data and the market is consolidating, getting ready for the next leg and the next direction. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was down 0.09%. And as I said in the introduction, tomorrow will be the CPI data. And the CPI data has been a very good mover of the market because obviously because of the 2022 bear market, due to the high inflation, inflation has been a sensitive subject that does like to put moves on the market. So when we talk about CPI data, we're looking at whether or not we're likely going higher or lower. And the number one thing I suggest up here in SPY is just simply sleep on cash and let the market do what it wants to do and then look for the next best trades tomorrow. So that's what I'm doing. Heavy cash, light swing positions, obviously, because once you commit to a swing trade, you really should just leave it be. But as far as position sizing, very light and just letting the market tell me where it wants to go from here. If we look at the price action, we've really been consolidating around this zone, right around 510. We've seen this price action from late February and we really have been struggling to break away from it. So this is a period of consolidation, and usually after consolidation, you do get a move, and the move is likely going to be a very sizable one. Now you can speculate about CPI and inflation all you want, but at the end of the day, this is a market in a bull trend, and markets in bull trends do typically like to go higher, so it should not be surprising to anybody if we do go up there and hit that new all-time high at 520. Now, do I think that's worth the risk to the reward? Not likely, because even if we do go up to 520, I cannot forget about the fact that there is this gap down here at 497. So you decide what the risk and reward is worth it for you. I prefer to sleep on cash and then react tomorrow. And if we do start to break down, if there is any fear of reflation or any fear of anything, there's plenty of money in this market that can start to exit. And if you look at something as simple as sentiment, if you go back to last year, there was a ton of comments and a ton of bears telling all of the bulls how dumb they were for saying the market could likely go higher. And now you're actually seeing a huge sentiment shift where you're not really seeing those bears, likely because they've lost all their money by now, or they've been converted to bulls and they now believe we're in this raging bull market that's going to start ripping higher even though we've already ripped higher. So big picture, we are in a blow off top scenario while SPY is above 500, and in a blow off top scenario, the key word is top, which means we are looking to put in a top, but it's very dangerous to call the top because the blow off part means we can go as high as the market wants to before the top is finally in. So all I can tell you is the day everybody starts to get bullish will be the top, and I don't really know if we're there or not yet, but the price action hasn't told us we've hit the top until we at least start breaking some of this support. So the number one support levels for tomorrow to pay attention to will be this support right around 507 and then down here between 501 and 502. If we start slicing through 507, I am already going to assume we're coming down to fill this gap at 497. That's how I view the market. If the bulls are strong, they should be able to defend that support. And if the bulls are weak, they're likely going to retreat back down to that gap fill or possibly even lower. So 507 is a very important level for me. If we can hold above it, yes, it's still possible we push to new all-time highs at 520, but I don't care if we push to a new all-time high without me. I would much rather miss that move because it's very small and then still look for a move lower and possibly catch that risk and reward to the downside. So that's just how I'm thinking about this. I really don't see the point to take on too much unnecessary risk overnight. Let's see the CPI data, see how the chart reacts to it, and then trade accordingly. On the NASDAQ 100 triple Qs, we were down 0.37% today, and the triple Qs now have the second day in a row closing down below the 5 EMA, and the 5 EMA is negatively sloping, so we are now at a very critical support in the triple Qs, which is right here, right around 436 to 437. If the bulls cannot hold this support, then it is a very obvious double top rejection from the previous all-time high, and a double top rejection would bring us down for the full measured move, which should take us down to close this gap at 425. So if we're going down to fill the gap in the triple Qs, we need to break that support at 436, confirm the break below the neckline to confirm the double top, and then we should easily see the bulls evacuate, give up on their long positions, and retreat back down towards this gap fill and rising 50 EMA. So it's very easy to visualize the bearish scenario, and if you look at the trend line, the price action has been closing below the trend line, and we've been consolidating all the way back to February prices, because if you look back on Friday, February 9th, that was where we were trading at 437, and that's about where we closed today. So that is a full month of the market just waiting and consolidating and digesting, deciding where it wants to go next. And when you get consolidation, you're much better off letting the price action tell you the direction, and that's going to be the breakdown below this support to tell us we're going lower, or the break to a new all-time high to tell us we're going higher. The break to a new all-time high would likely bring us to that next price target higher at 453, but again, I do think the bears have something to work with here, and I would give them benefit of the doubt, especially if we break down below support. On the Dow Jones, we were up 0.11% today, and the Dow Jones is trying to hold this support right around the 20-period moving average right there at 388, and you can see all of the moving averages are bunched up there, which could be a resistance or a support. But in order to get bullish in the Dow, I would like to see a break above 391, and that should confirm that we are going to 400. While we're below 391, with this rejection from the resistance trendline right around 390, it is possible we're coming down towards 381 to 382. That will require the break of that support at 385, and again, these are prices we've seen going all the way back into January, so the Dow Jones really hasn't gone much of anywhere. On the Russell 2000 IWM ETF, we were down 0.79% today, and we did continue that pullback, and we did break down below Friday's low, so we're getting very close to this gap fill zone just below 202, and if we break below that, we need to hold this support zone right around 196. So you can get risk off if we start breaking down below the gap fill, or you can wait until we get the bull breakout above 207 to get more bullish for the price target at 214. We really have no volume in the small caps, and again, they are also consolidating, so we should be getting a breakout soon and see the next leg in the small caps, and there is a scenario where the mega caps and the rest of the indices could be going lower while the small caps are going higher. On the ARKK ETF, we were down 0.2% today, and intraday we were trying to break out, and we did have a very bearish rejection closing near the low of the day, but the price action is still above all of the moving averages within a bull trend, but we really need to see that bull breakout above 52 to confirm that we're going higher to the price target at 54.5. Get risk off if we start to break this support at 50, because it means we're likely coming back down towards 48 or 47, and if we break that support, it's a confirmed double top to the price target down here at 44. On the VIX, we were up 3.26% today, and the VIX did close and break out above 15, which is completely normal as long as this is where the VIX finds resistance and starts to crush. But if the VIX starts spiking above 18, then we're going to see high volume panic selling. So do not rule out high volume panic selling. You can see the VIX is building a lot of bullish momentum, and the last low that we put in the VIX was a higher low. So it is possible we're about to see a very volatile period in the market. So do pay attention to that and just be a little more risk off while the VIX is above 15. On Bitcoin, we're currently trading right around 72,000, and Bitcoin did get that confirmed break of 67,000 and the all-time break of 69,000, which tells us we're likely going higher towards 74 to 75,000 next. Now, this is a brand new all-time high, and this is going to bring a lot of hype around Bitcoin, which could mean that it either goes a lot higher or it's going to suck in a lot of dumb money and then start come crashing back down. Just be careful with Bitcoin here and make sure you're managing your risk, which means you can stay bullish as long as we can hold this breakout at 67,000, and you can continue to ride it to see how high it's going to go, but just make sure you have an exit strategy, whether that be taking profits at the price target or down below the breakdown of support. On Nvidia stock, we were down 2% today, and if you've been following along, you know this is no surprise to me. I had a very good feeling we would fail to close above 933 and then start coming back down to at least fill this gap at 823, and if we can't hold that gap as support, we're likely coming back down towards 740. There's nothing bearish about this. This is a completely telegraphed move where we just went way too far, way too fast, and now we need to correct some of that before we can go any higher. So watch those supports, and if they break down, just look for that next support leg lower. On Tesla stock, we were up 1.39% today, and intraday we were pushing back up to the resistance at 183, and once again we had a rejection from 183, and price action is still below all of the moving averages within a bear trend. So it's very unlikely we're going to get that bull move while we're down here below 183, and while we're down below 183, it is still possible we come to the bottom of the channel right around 160. Now, if we can start breaking above 183, we should at least close that gap right around 187. And then if we can hold above 183 and start to close back above some of these moving averages and reverse the bear trend, then we can start to get more bullish. But right now, you need to be risk off and very cautious because Tesla could be trying to go lower. On Apple stock, we were up 1.18% today, and intraday we did fully close the gap that we almost filled on Friday, and we did find resistance between the gap fill and that resistance at 174. So with the dead cat bounce, it's still possible, if I update this, that we did get rejected at this resistance, and that was the dead cat bounce lower high now that we filled the gap, and then we come down lower here towards 167 to 163. Now, if we're going to get more bullish, we need to start breaking above 174, and even if we can get above 174, it's still possible our lower high is at the gap fill at 177. So Apple is in a downtrend. That's why I'm telling you to be cautious of a lower high here, because in a downtrend, you're going to get lower highs and lower lows. And the lower high is either going to be here right around 174 or up here between 177 and 179. So still respect the downtrend, and if you're trading Apple long, just make sure you're managing your risk. And if we are going lower, we should break this support right around 171. So jumping back over to the S&P 500, tomorrow should be a volatile day, which will be great for day trading, and there's no reason to take on too much unnecessary risk overnight. Let's go to cash, wait to see the price action tomorrow, and then place the next best trades. This is what we'll be doing in the Discord server, so if you want to come follow along and see how we're trading price action, you could come join the Stocks Channel Discord server, which you can find out how to join below. You'll also get access to all of my intraday updates and technical analysis and my trade ideas. So if you want to come trade with us, join the Stocks Channel Discord server. So just be prepared tomorrow. It should be a very volatile and fun trading day. It's just about being patient and being disciplined and waiting for the next best opportunity with the best risk reward ratios. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.